The US dollar is extending weakness as investors are braced for a season of corporate reports at the peak of the coronavirus pandemic. The greenback's decline is unlikely to last for long. There are good reasons for its bullish trend amid uncertain prospects for the global economy. Stock investors are betting on the rally on the grounds of a slowdown in the death toll, which means that some European Union countries are going to reopen domestic economies. Futures on the US stock indexes have gained over 1% today amid better than expected trade data from China. Besides, there is evidence that some countries are going to soften lockdown measures. Interestingly, the equity market perked up despite the fact that the first portion of corporate reports confirmed the damage from the coronavirus outbreak. As expected, the IMF discouraged the market with a gloomy forecast. The global economy is going through the worst recession since the Great Depression. The ongoing disruptions in supply chains will slash the global GDP by 3% during the whole 2020. The US dollar index sharply dropped below 99 points. The greenback is losing ground across the board. The aggressive Fed's policy is beginning to weigh down on the US dollar. Last week, the regulator launched another program of generating extra liquidity. The Fed's balance sheet has already exceeded $6 trillion and it's still expanding. Last week, the US dollar index retreated, having touched 101. This week, it's trading under pressure. The fundamentals do not signal a clear-cut bear trend of the US dollar. The new OPEC Plus pact enabled Brent crude to consolidate above the level of $30 a barrel. Meanwhile, oil quotes are creeping downwards. WTI settled down at the level below $22. Crude oil is unable to develop a steady rally as joint production cuts and all efforts cannot stabilize demand and remove the oil glut. Thus, commodity currencies find it difficult to assert strength. Apart from headwinds in the oil market, the Canadian dollar has been hurt by other factors. The domestic economy shed 1 million jobs due to the coronavirus pandemic. The Bank of Canada is holding a policy meeting this week. The regulator is likely to maintain the dovish rhetoric, dropping hints about fine-tuning interest rates to shore up the economy and financial system. The policy meeting is sure to be one of the market-moving events this week, which could influence the USD/CAD pair. Today, the US dollar is holding the upper hand over its Canadian rival. The currency pair is still trading at the level below 1.40 with the prospects for a further climb. Traders are interested in the rhetoric of Canada's regulator. It's expected to downgrade economic forecasts as the domestic economy is slipping into the worst quarter over the recent 3 decades. In this context, fundamental pressure on the loonie will increase. That's all for now. We keep monitoring the financial market situation. Subscribe to our channel and keep abreast of the latest events. See you tomorrow.